Now, I've talked about this tax issue before, but if you're a fix and flip investor and you're planning to hold the property, you need to make sure you underwrite this tax issue correctly or it'll cost you thousands. When you're a flipper, if you buy a house, you typically buy it from an owner occupant, meaning someone who owned and lived in the property. With that being said, it's very likely that they had the homestead exemption on the tax numbers, meaning that their tax bill was reduced because they were an owner occupant and not a tenant occupied house. When you go to underwrite your tax bill, you need to underwrite it for that homestead exemption being removed, because when you go to refinance that property, your tax bill is going to be higher, not only because, one, you're no longer going to have a homestead exemption, but also two, you likely, if you flipped it and rehabbed it, you likely increase the assessed value. At least that's what they're going to tell you when they drive by next year. So you need to make sure you're underwriting these tax issues correctly so that you're not surprised when the refinance